Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 19th of September 2021. And we're looking at some arguments as to why gold and silver prices may have further to fall. And why this coming Wednesday could be pivotal. So let's take a look. Last week we saw gold prices fall by 1.8% and silver by 5.7%. With gold standing at $1,755, it's down some $312 or 15% lower than its all-time high reached on the 6th of August 2020, where it stood at $2,067. And with silver standing at $22.41, some $26.29 lower than its all-time high of $48.07, last reached on the 28th of April 2011, almost 55% lower today than it was then. And we therefore have to ask the question, are these falls going to continue? The run-up in gold and silver prices last year saw silver reach $29.59. Where most pundits were claiming this is now the start of its near imminent rise to $50 and then $100 and beyond. Do you remember seeing those videos? Now, whilst we felt there was a possibility of gold reaching $2,300 and silver $37 by the end of 2021, providing, of course, this momentum continued, we never advocated nor supported the majority who were forecasting $5,000 to $10,000 gold and $50 to $100 silver. And a quick check through our previous videos will show you that we pointed out that this was not going to happen. Now, with just 3 months to go before the end of the year, with the Fed making an announcement on Wednesday, and market expectations that it may announce the date it proposes to reduce its tapering of its bond buying program, and interest rates forecast to rise towards the end of 2022 or sometime into 2023, the market consensus is that the dollar may continue to strengthen, which means gold and silver could indeed have further to fall. Added to that, with the industrial demand for silver constantly being threatened by the spread of the Delta variant of COVID-19 and further potential shutdowns ahead, or at least trade affected, it is difficult not to conclude that silver may indeed fall even further than gold in percentage terms, as it has already of late. So let's take a look at some of the various news agency reports on where they see gold and silver prices going, at least for the short term. Okay, let's take a look at Bullion Vault's article dated on Friday. Fed signals tapering. Gold bullion sets lowest weekend since April. Silver cheapest in a year. Gold bullion failed on Friday to hold a bounce from yesterday's steep plunge, heading for its lowest weekly close since April in dollar, euro, and also sterling terms, after strong US data hardened expectations that the Federal Reserve will start tightening monetary policy by announcing QE tapering at next week's meeting. Quote, yesterday's retail sales data added more fuel to the hawk's fire, says Friday's client note from bullion market specialist Rona O'Connell at brokers StoneX, following Wednesday's strong manufacturing figures. Having dropped $50 on Thursday, gold bounced $20 overnight and during Asian and London trade today, but bullion then gave back half of that rally to slip through $17.60 per ounce once more. Federal Reserve officials will seek to forge agreement at their coming meeting to begin scaling back their easy money policies in November, said a Wall Street Journal article earlier this week, a signal that back-channel messaging has begun, and that is extremely important. There is back-channel messaging in order to avoid market surprise. Fed Chair Jerome Powell in fact made it clear in last month's Jackson Hole speech that tapering was now certain if not imminent, saying that the timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff. Now, this is the important element. What Powell indicated was there is no inextricable link. Now, whether this is true or not is another matter, but this is what he's saying, between tapering the bond purchasing and raising interest rates. He's done that in order not to spook markets. Now, when we had the appalling non-farm payrolls figures, which came out a fortnight ago, or less than a fortnight ago, we could see that there was a very serious prospect of a delay in the tapering. However, market data out this past week or 10 days have completely altered that background image, and especially the retail sales figures in the United States, even though in the UK we did not receive anything like that sort of growth in retail sales. Now, this is important. Silver prices also bounced early Friday but then fell back, trading around $23 per ounce at midday's benchmarking in London for its lowest weekly finish since the 25th of September 2020. Comparing the two formerly monetary metals, the ratio of gold price to silver bullion quotes today held above 76, the yellow metal's highest valuation in silver for 4 weeks. Platinum prices held onto their overnight rally. It is possible, says O'Connell at StoneX of Gold Bullion, that there may be investment institutions taking advantage of this fall in order to pick up some value. At the physical level, however, the story is different. There has been no discernible bargain hunting in China in the face of this fall. But this may be partly because there are national holidays coming up next week, and the first week of October is the week-long national holiday. The fact that Shanghai is still at a low but steady premium to local London reflects low import levels. Now, what is perhaps a little more concerning about gold is this article published on the 16th of September by Bloomberg Surveillance. Russ Kirsterreich, the portfolio manager at BlackRock Global Allocation Fund, says his fund has sold almost all of his gold holdings on expectations that real rates will normalize. 14 months ago, we had a fairly significant position in gold. Today, we've reduced it to almost zero. So those of you who have been seeing the pumpers coming out in force in recent weeks, saying gold is going to the moon, silver's going to the moon, and they have done so, this is why we regard them as misleading, when the actual data is showing that people are actually exiting gold. Some private investors, and particularly now younger investors, are looking at cryptocurrencies. That may be a fad, or it may be a long-term development. What we can say from our knowledge in that market, which is still relatively new, but we are gaining contacts increasingly, is that most fund managers are now looking at setting up some form of cryptocurrency relationships and funds and platforms. And once it passes the regulatory hurdle, then that will skyrocket. According to Reuters, published on Friday, world shares fell on Friday, pressured by concerns over China markets, the potential for a US corporate tax hike, and an update on the US Federal Reserve's tapering strategy next week. We've already heard in the UK that national insurance contributions, which is basically a tax on those working, are going to go up, and this is likely to filter into the United States. The US Treasury note yield rose to touch a 2-month high, and the dollar touched a 3-week high. Again, blasting out of the stratosphere all this nonsense about imminent dollar collapse that you get off the pumpers and those who hate the dollar. Market Watch Gold futures ended lower on Friday, with prices tallying a third consecutive session loss and a second weekly decline in a row, as the US dollar strengthened ahead of the Federal Reserve's policy meeting next week. Gold had a bad week, and its price action may be its way of front-running an increasing likelihood that the reflation trade is coming back to finish off 2021. Michael Ambruster, managing partner at AltaVest, told MarketWatch, pointing out that Hedgeye had made that macro forecast. Unfortunately for gold bugs, gold tends to trade lower in a reflationary economic regime because Treasury yields tend to rise. Meanwhile, what the Federal Reserve does at its meeting next week is anyone's guess, but expectations are not for a tapering announcement, said Armbruster. That is expected in a future meeting. Now, if that is the case, and it isn't mentioned, that may give the markets some relief. For how long? We have to wait and see. Now, according to livemint.com, talking about silver, because we're covering both here, technically, if silver breaks below 22.50, liquidation pressure would extend the day. Immediate turnaround point is at 25. The dollar index hovered near 3 weeks highs against a basket of major currencies after strong US retail sales data. This tempered expectations for a sharp slowdown in economic growth in the third quarter. As a result of a recent weaker than expected rise in US inflation, international gold prices are trading with bearish bias below $1,800 gold, adding to confusion regarding the Federal Reserve's schedule to begin asset cutting. Next week, that means this coming week now, the Fed will announce its latest policy decision, which could provide insight into the central bank's future plans. Technically, international gold is trading with bearish momentum. So Wednesday is pivotal, and we shall look and listen carefully to what Jerome Powell has to say. His comments may indeed dictate the price of gold and silver for the rest of this year. Markets are already beginning to factor in some bad news. We've only a few days to wait and see. But rest assured, the pumpers will be out in force beforehand, and we may indeed see increasing premiums should prices begin to fall further, as bullion dealers will not wish to lose money on the stocks they already hold. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign, and let us know what you think is going to happen to gold and silver prices over the coming weeks. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.